Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, welcome to the April 19th edition of Basis Loaded with Joe Schmit. I am Joe Schmit, and this episode is produced, as always, by Paige Driscoll. And what we do here is break down the latest from the NDPSR report, starting with butter. This butter number coming in at 238.91 represents a plus 6 to the CME 1 week average of 232.81. Plus 6 is outsized basis, well above our expected 2-cent positive basis, and we achieved that while trading 7 loads on the CME. So speaking of the CME weekly average was down 5.5 cents, and here the NDPSR butter only moving 3.5 cents. So we gained a little basis. Manufacturer was able to call a higher than expected price. However, as you'll notice, has been the trend lately, outsized basis, but volume suffering. Just short of 3.4 million, well below our expected 3.5 million. So the manufacturer calls a higher than expected price on lower than expected volume in butter. Moving on to cheese. Blocks, 197.07. That is essentially a flat basis to the CME 1 week average of 196.85. So that is a disappointing block price. We traded 3 loads at the CME that week. And once again, the CME weekly average was down 6 week to week. Here, the NDPSR moving only 5.5 cents lower. So we moved from negative basis last week to flat basis this week. So we're getting a little bit closer. But the fact that blocks are still trading negative to flat basis is just a real indication that buyers were unimpressed with that $2 neighborhood. Even further indication of that disappointment in price would be here in the volume. Blocks only trading 2.2 million pounds. So flat basis on lower than expected volume, certainly a disappointment versus the CME average. In barrels, 188.08. Now that represents a plus 5 to the CME 2-week average of 183.28. Plus 5 is right in the middle of our expected basis and pretty impressive because we're into the break at the CME. Typically, prices are slow to follow on the NDPSR. Here, however, we're seeing prices move along 1-to-1 with the CME. We averaged 11.5 loads over the 2-week average that I used to calculate that 183.28. And even with that volume on the exchange, volume here on the NDPSR coming in a little bit above our expected 13.5 million, 13.8, almost 13.9 million. So normal basis in barrels, even though you would expect a higher than normal basis with prices moving sharply lower, that barrel volatility is similar to Chicago temperature, where it's 80 degrees on Saturday evening. Come Monday morning, we have snow flurries. In the barrel, of course, we went from the mid-50s to the high 90s, back to the low 50s. All that volatility, though, the NDPSR seems to be tracking pretty close to the CME weekly average. And then I think the real story as of late, especially for this report, is whey, 44.81. Now that's essentially a half-cent premium to the 1-week average at the CME of 44.40. But what's interesting about this number is we had an outsized volume traded at the CME last week. We traded a whopping 47 loads at the CME with an average price of $36.75. So when we're trying to come up with an estimate for this week's NDPSR, of course, the sales that are reported on this report occurred last week. Most forwards for whey are based on prior week's NDPSR data ship. So the benchmark for the majority of the sales of dry whey would be based on the April 1st NDPSR number of 45.44. we would expect that under contract that we have anywhere from 4 to 5 million pounds ships on an average week at prior week's NDPSR 45.44. However, last week we had all that volume at the CME. As I said, it was 47 loads, which not all of it came from the manufacturer. Only manufacturer sales are reported. Broker sales are secondhand sales and do not fall into this report. So with the 47 loads, I'm just going to call it 1.5 million pounds traded at the CME, reportable to the NDPSR for this number. And then lastly, non-fat, 117.53. That is a plus 2.5 to the CME 1 week average of 115.10. So 2.5 is right in the wheelhouse of our expected 2 cents basis. 2 over basis, that's with 4 lows traded on the CME. What's interesting is, we had that big lump of sales go in 2 weeks ago. We had above normal volume last week. That trend carries through again this week with 26.2 million pounds traded on the NDPSR. So the manufacturer calls average basis while he has been able to move above normal volume. Manufacturer seems to be getting clear here, and value buyers are stepping in. So this is week 2 of the 4-week April pricing cycle. Currently getting an April class 3 of 1872, April class 4 of 1815. So that's right there, 60 cents, class 3 over class 4, kind of close to our expected historical 70-cent premium, class 3 over class 4. However, that's when that ends, because if you carry current CME equivalents out through the entire May pricing cycle, currently getting a May class 3 of 1670 and May class 4 of 1814. So we'll see what they have in store for us in the weeks to come at the CME. I'd like to be the first to welcome those of you that are coming to Chicago for the upcoming ADPI conference. Hope to see you soon. Until next week, I am Joe on behalf of Paige and the entire EverAg Insights team. Thanks so much. Bye.